The president made clear in an interview with CNBC a couple of weeks ago that he preferred lower rates. Talking about the Fed's hikes, he said, quote, "I'm not thrilled because we go up, and every time you go up, they want to raise rates again. I'm not happy about it, but at the same time, I'm letting them do what they feel best." Did he go too far with that statement, commenting on Fed policy?
Look, a Fed is given their mandate by Congress, and that mandate is quite clear. You can argue whether it's the right mandate or not. I think the other thing that everyone should think in mind when they talk about interest rates is why are they going up? So if they're going up, and they're going up gently, if they're going up because the economy is strong, that net's a very good thing. So it's very hard to look at interest rates and separate that as one factor and say it doesn't relate to how the economy is doing. So I think as long as rates are going up and the economy is strong, we're going to be fine.
When we look at the shape of the yield curve, a lot of people get concerned about the fact that it's flattening. Does that, to you, suggest that the Fed is going a little bit too fast, that they should take the foot off the hike pace for now?
No, I think it's, again, a very simplistic way to look at it. That's one factor. There are a lot of other factors involved. And well, in history, that happened before, but we have growth. I personally think the 10-year bond is going to be going up, not down. But again, like I said, for good reasons. A natural rate for the 10-year bond today, with inflation at 2%, would be 4%. And so, we've had a suppression of rates for the better part of a decade around the world. Those things are reversing, but so far to good effect, which is global growth is going to be as strong as it's been in a long period of time, and America looks like it's accelerating. So as long as they're raising rates in that's fine.
When I think about your share price, Jamie, and for all of the big banks, it's been so tightly correlated with what the yield curve is doing. How do you think about that? Is that correlation overdone, whether we get a slightly flatter, slightly steeper curve? Do you think the share price reaction to it is overdone?
So we make a very clear disclosure. What do interest rates alone do to our P&L? Now, of course, that's not what the world is, right? Interest rates go up and down for a reason, but alone, rates going up, short rates going up helps our P&L, helps our profit line. So, but I think there's an overreaction to that. I think banks are all different. We're going to do quite well as a bank regardless. We don't take bets in interest rates. But if you think that rates are going down, the 10-year, because the economy is weakening, obviously that's going to affect all banks.
Yeah.
I just think that's not what's happening out there.
Yeah.
So.
In terms of the equity market, Jamie, there's been some big tech earnings misses in the last couple of weeks. Facebook was the high-profile one. The Nasdaq is down sharply again today. When you see those earnings numbers and you see the market reaction, does that to you suggest the equity market, perhaps particularly the tech sector, is a little bit overheated right now?
Not really. I think some of those things are very company specific. And obviously companies that have very high PEs, when you forecast the future changes a little bit, it's going to dramatically change the stock price. But if you look at stocks, if you think we might have a good economy for a couple of years and their earnings are going to grow 5-10% or more, even if PEs come down because rates are going up, that's a very likely outcome. So I'm not saying it's going to happen. I look at the possibilities and probabilities, but the economy looks quite strong. Consumers in good shape, their balance is in good shape, there are no potholes out there, lending has been pristine, capital expenditures going up, more people are going back to work, unemployment may hit a post-war low at one point this year. Those are all positives. And we don't have the leverage in the system we had in 07. There's always going to be some kind of problem, but that is not the problem today.